Okay, so welcome today. So we are going to talk about due diligence because that is really important, and for tax professionals, it's extremely important. If you don't do due diligence correctly, you can actually get penalized for it if audited. So we're going to talk about one of the exercises. And let's talk about Leroy Johnson here. I'm going to bring him up. In the sample exercise, it talks about some documents that he brings in that they don't show in the exercise. Daycare receipts and stuff like that. They mention those things because those documents have data on them. And those data you can use to answer some of the due diligence questions. That's why they have those documents just listed with no data for those documents. They don't show them on the pages. They just have them listed so that you can answer the due diligence questions. If anybody have any questions, just put them in the chat. So I'm going to bring him up and I'm going to hit edit, go into the return, and go to the due diligence questions. So since we're in the interview mode, I'm just going to go ahead and go. Actually, I'm going to go to the. I think I'm going to actually. I'm actually going to get out of here. I'm going to go back in. And I'm only doing this because I'm a more experienced preparer, but I'm going to go in here. Edit with direct input, just because I want to show you something specific. Okay. We're going to do the due diligence. Due diligence are the questions for the children and for head of household and for the opportunity credit, child tax credit, all those questions where you have to sit there and ask. So when we're doing this, we can put in the phone numbers, so we can go through here and see what the due diligence questions are. So you can learn where all these things are. So we have the paid preparers earned income credit checklist for all these different things, 8867. So here we have these questions. And I want you guys to go through every single question. Now, in my old software, they kind of pre-answer the question. So we can go through them really, really quickly. By going through them really quickly, you don't actually read them from year to year. And these questions can change. I like this software because it doesn't do that. It actually kind of forces you to actually answer them. Up top here has check boxes for which ones you need by the questions you've actually answered throughout the program. So we know he's filing head of household, he has EIC, he has child tax credit, additional child tax credit. So let's go through the questions. Did you complete the return based on information for the tax year 2022 provided by the taxpayer or reasonably obtained by you? Yes or no? So there is a section here where you could put notes. Make sure any questions that you ask him or your client, you take notes and you put the notes in here. If this person is ever audited, you have the notes for the answers given to you. Now, I have actually printed out these lists in the past. You can go online and just print out this form. Have the client even answer some of these questions for you and sign the form. When you set when you send forms to the client to sign, you can actually request them to actually sign this form. Question 2, if credits are claimed on the return, did you complete the applicable EIC and or child tax credit worksheets found in the form 1040, all the forms here, or your own worksheets that provide the same information and all related forms and schedules for each credit claim? Well, of course, you filled them out, right? Now, if something didn't apply to them, you can click on not apply, but you're going to fill those forms out. Did you satisfy the knowledge requirement? To meet the knowledge requirement, you must do both of the following: interview, ask questions, and contemporaneous documents. Review information to determine the taxpayer is eligible. So you're supposed to ask them questions, okay? A lot of times it's a matter of, do some of their documents make sense? If the client has 2 kids, it only makes $5,000. Well, for head of household, does it make sense to file head of household? No, it doesn't. And they don't need to file head of household because the standard deduction is only $12,000 for a single. Standard deduction for head of household is $19,000. They only make $5,000. File them single. There's no reason to file head of household. It will not make any difference in their taxes. It just takes one set of due diligence questions away, one less thing for you to be audited on. And they won't even know. Honestly, they don't look and they won't check. They won't, as long as they get their maximum refund, they don't care if they file single or head of household. All they care about is they get the maximum refund. But you want to make sure things make sense. Claiming children does not require they provide more than half their support. Claiming children requires that children do not provide more than half of their own support. Head of household requires that you provide more than half of the support for the home the children live in. So you could have $5,000 of income and still claim children. But you should find out how they support children on $5,000. They could have Section 8. They could have child support. So there are other income sources that they could be using to live off of. So then, did any information provided by the taxpayer or a third party for use in preparing the return or information reasonably known to you appear to be incorrect, incomplete, or inconsistent? Sometimes you get handwritten W-2s. It's pretty rare, but it has happened. Why would somebody give you a handwritten W-2? Maybe that is used in something that only has one employee. They don't want to go, or they don't even know of existence of something like Track 1099, where they can go and print just one 1099. So they do it by hand because they don't know how to do it any other way. Sometimes you can tell if something looks incorrect, and it could just be an employer just doesn't know. If the numbers don't look done right, you can ask. 4A, did you make reasonable inquiries to determine the correct, complete, and consistent information? B, did you contemporaneously document your inquiries? So that just means, did you actually write down? Did you find the documents to answer your questions? This software requires you actually put that answer in here. So click on the view explanation and type in your answer. So like I said in the sample, it said you had daycare statements and utility bills. So I typed in here, yes, daycare statement, utility bills. So you can write in here an explanation of what the client tells you. 5, did you satisfy the record retention requirement? To meet the record retention requirement, you must keep a copy of your documentation referenced in question 4B. A copy of this Form 8867, a copy of any applicable worksheets, a record of how, when, and from whom the information used to prepare the Form 8867 and stuff was retained. So, examples of documents to rely on, you click the button. Don't be afraid to click buttons. Residency of a qualifying child, it lists things here. Disability of a qualifying child, Schedule C. These are things you can use. So the question is, did you satisfy the record retention requirement? So keeping a copy could mean they uploaded a copy into the app, the phone app that we gave you to use to do the tax return. So yeah, you're keeping a copy in the app. And that's how we did it. Mary told you he uploaded a copy of the document of the daycare information. So yes, they could just upload this information into the app. And again, there's a view explanation, and you can type in. See, I put here utility bills and 1099-C. You want more than that, just give it a little bit more, but not a lot. And you can say in here, under view explanation, you can say this, and you can say documents are in phone app or software. That way we know exactly where the documents are. Documents can even be sent directly to me at the end of tax season if you want. You can send all documents to me. 6, did you ask the taxpayer whether she could provide documentation to substantiate eligibility for the credits and or head of household filing status and the amounts of any credits claimed on the return? So this is not saying you have to have the documents in hand, these documents in hand. Is asking you, can the clients provide the documents if audited? So for head of household, they need to be able to prove they provided more than half the support of the children. This could be financial documents for W-2s. If they're students, maybe they have tuition. Maybe they have scholarships. However, they support more than half the support of the home. They would need to be able to prove this information. Doesn't mean you have to have every single income document. Seven, did you ask the taxpayer if any of these credits were disallowed or reduced in a previous year? Were any credits disallowed or reduced in the previous year? People, we don't always ask this question, but we should ask. And you actually have to ask here, put here, yes or no, did you actually ask? Now, if I have been dealing with these clients for 5 or 10 years, I kind of know, I already know if they've been disallowed. So I may not have actually asked this question. So I might say, no, I didn't ask. But you know what? If I say here that I did not ask, I'm going to go into the note section. And I'm going to say here, I did not ask if credits were disallowed because I have been working with these clients for the last 10 years and or before the children were born. And I personally know that none of these clients have ever been disallowed. Or you can even click on maybe on not applicable. They've never been, you know, they've never been disallowed, so it's not applicable. So you see when I click not applicable, the next question, were any credits disallowed or reduced? It's actually no, and it doesn't even give us a choice to ask. When I click on no, it doesn't give us a choice to here either, only when I say yes. Now, if they have been disallowed in the past, there's a recertification form 8862 that you can fill out to ask for the document for them back. So if they were disallowed, did you complete the required recertification form 8862? You can see if I click on no, it doesn't actually let me click on these buttons. 8, if the taxpayer is reporting self-employment income, did you ask questions to prepare a complete and correct Schedule C? So they're asking me, did I ask about income? Did I ask about expenses? Did I ask about auto? Did I ask about depreciation? So hopefully you did. Here, this is really important because when it comes to these earned income credit and child tax credit and stuff, think of a bell curve. We haven't used a bell curve since high school, really. As your income goes up, the credits go up. Then you hit a maximum. Then as your income goes up, the credit goes down. So a lot of people know how to make just enough income to hit that maximum of the bell curve. They don't want to make $1 more so that their credits go down. They don't want to give you they just give you just enough expenses to hit that number. And so sometimes they'll say, well, I don't have any expenses because they don't want to reduce those credits. Unfortunately, that is considered. Okay, so now, so you need to make sure you ask for all the expenses. It is considered fraud if they do not bring all the expenses to get more credit than they are required to. I had a truck driver client. He was always afraid of getting too much earned income credit if he didn't qualify because he had so many expenses and he was just like, oh, I don't want any EIC, I don't want any EIC, I don't want any of it. So that section was due diligence requirements. Then we have another set of questions, due diligence questions for returns claiming EIC. As you can see, there's a lot of questions. Okay, so due diligence questions for returns claiming EIC. There's the question 9. Have you determined that the taxpayer is, in fact, eligible to claim the EIC for the number of qualifying children claimed, or is eligible to claim the EIC without a qualifying child? So, like I said, there's a little bell curve on how much you could claim for EIC. Now, there's actually a different bell curve for depending on how many children you have. There's a certain amount of EIC for one child. Then the amount of EIC goes up for 2 children. There's an amount of EIC goes up for 3 children. There is a small amount of EIC for no children, as long as you're in a certain age range. So, did you see if they actually qualified for that much EIC? You want to make sure that they're claiming all their income and all their deductions. So B, did you ask the taxpayer if the child lived with the taxpayer for over half the year, even if the taxpayer has supported the child the entire year? Because there's a residency requirement. C, did you explain to the taxpayer the rules about claiming the EIC when the child is a qualifying child of more than one person, the tiebreaker rules? So we worry about that if there is a second parent that can claim the child. So if the child qualifies to be dependent of more than one person, then we have to worry about the tiebreaker rules. And we'll go over the tiebreaker rules in another video. So that one I commonly use as not available, not applicable. If there are 2 parents that can actually claim the child, then the parent with the highest AGI automatically gets the child. Now, only qualify for head of household, because only one person can pay more than half the expenses. No two people can mathematically provide more than half the support. Okay, due diligence questions for returns claiming child tax credit, additional child tax credit, or other dependent credit. Other dependent credit is for those children who are 17 or over. The other ones are for children under 17. 10, having determined that each qualifying person for these credits is a taxpayer's dependent who is a citizen, national, or resident of the United States. So these are requirements of these credits. They can actually, see, notice it says citizen, national, or resident of the US. They can actually be a resident of Mexico or Canada. Look at the rules. Did you explain to the taxpayer that she may not claim if the taxpayer has not lived with the child for over half the year, even if the taxpayer has supported the child, unless the child's custodial parent has released a claim to exemption for the child? There are cases where you can actually split the dependence credits. One parent, if the child can live with you, and you can actually release the exemption to another parent. With the 2017 Tax Cut and Jobs Act, they actually suspended the exemptions and doubled the stamp deduction. So right now, there are no exemptions to actually release. But whoever gets the exemption gets some of the other credits. So we can still release the exemption and that other parent gets a couple other credits. But head of household still stays with the parent the child lives with. We will talk about those in another video. 12, did you explain to the taxpayer the rules about claiming these credits for a child with divorced or separated parents or parents who live apart, including any requirements to attach a Form 8332 or similar statement to the return? A Form 8332 is how we release that exemption to the other parent. If we don't have two parents that we have to release these exemptions to, we don't have to worry about this. Then we don't have to, we can always say not applicable. Due diligence questions for claiming head of household. Have you determined that the taxpayer was unmarried or considered unmarried on the last day of the tax year and provided more than half of the cost of keeping up a home for the year for a qualifying person? Okay, this is important. It says unmarried or considered unmarried. We all know what unmarried is. It means you're not married, you're single. Considered unmarried means not married for more than half of the year. That means they had to have been separated prior to essentially June 30. Has to be 6 months plus 1 day at the second half of the year. State requirements may be different. In California, so in order to be head of household, you have to provide more than half the year. In California, the year the parents separate, they do not count the time the parents live together. So it's very difficult to have more than half the year if you cannot count some of the year because the parents live together for part of it. And we didn't know that at first, and we actually had an issue with an IRO, the state letter with that. Okay. Then we get to the end here. You will have compiled with all due diligence requirements for claiming the applicable credits and or head of household filing status on the return of the taxpayer identified above if you interview with the taxpayer, ask adequate questions, contemporaneously document the taxpayer's responses on the return in your notes. B, complete this form 8867 truthfully and accurately. Complete the action as described. C, submit form 8867 in the manner required. D, keep all 5 of the following records for 3 years. A copy of this form, the applicable worksheets, which is any of the worksheets that are included in the return, copies of the documents provided by the taxpayer of which you relied on. So if he gives you the daycare statement, he gives those things, keep the copies of them. A record of how, when, and from whom the information used to prepare this was obtained. A record of any additional information you relied upon. So that means all the questions that you asked, the answers in the notes. Don't be afraid to ask the clients to supply you with additional information. In all honesty, nowadays with combined families and lots of different last names, you may need more additional documentation. Once 2 people are married, even if they're bringing in children from other people, and they're now stepchildren, they are now considered that person's child for tax purposes. There's no stepchild. You're now that person's child for tax purposes. Since if you have not complied with all due diligence requirements, you may have to pay a penalty, $560 for each failure to comply. 15, do you certify that all the answers on this form are, to the best of your knowledge, true, complete, and yes or no? If you say no, you haven't done the form. And then you're going to sign it. So, of course, it's all going to be signed electronically. So, you will get used to answering this. You're going to get used to asking for the appropriate documents. When I get new clients, I ask for their driver's license. I usually ask for birth certificate. I don't always ask for birth certificates. Sometimes I do. You're not required to. Sometimes it has to. In the old days, everybody in the family had the same last name. Nowadays, people don't. People didn't understand. So you can get earned income credit for up to 3 children. But you can get the child tax credit for all your children. So people thought they could only get credit for 3 kids. They didn't think they could get anything else for more than that. So they would sell off their children's social security numbers. When everybody in the family had the same last name, and one kid all of a sudden has a different last name, then it was more common for me to ask for birth certificates. But you'd ask for everybody's birth certificate, not just one, or else that's suspicious. Nowadays, everybody has different last names, and it might be more common to ask for birth certificates. So there's a lot of fraud in the earned income tax credit, and this is why. Because people were selling off the social security numbers for their kids and getting a piece of the money. I haven't looked at what this year's charts are, but in the past, earned income credit for 3 kids maxed out at $8,400. In past years, and it's changed since then. So right now, child tax credit is $2,000. It used to be the additional child tax credit was $2,000. Now they've capped the additional child tax credit at $1,500 as the refundable portion. So if you had 3 kids times $1,500, that's a $4,500 plus the $8,400 for the EIC. That's $12,900 in free money for 3 kids. And then again, you can get $1,500 for each additional child. But instead, then they'll just sell off their other kids so that other people can get that $8,400. So this is why there's so much fraud in here. I have seen people with 9, 10 kids. So it does become a problem. This is another reason why anybody with earned income tax credit who files early in the season now cannot get their refund prior to February 15th. In the past, the refunds were never held up, but now anybody with earned income credit on their tax return who files prior to February 15th, all EIC returns are held until February 15th for additional scrutiny. Okay, do we have any questions? I know it's a lot to take in. It's a lot of questions. You'll get used to asking the questions. They'll become quick. This is another reason to do the sample questions, is that you'll get used to answering the questions so that you'll get fast. Okay, then have a great day.